And welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from the New York Post, Fox Business. My partner Bob Sloan for S3 Partners. Um, I'm just going to go right to Bob because he's on a winning streak with two stocks, J-Bill and Oracle. Bob, take your victory lap, and I'm going to shut up.
Well, first of all, that in and of itself, we got to celebrate that a little bit, Charlie. You're quiet as,
Yeah, that's
so we got
once
to
in a
celebrate.
lifetime event there.
It's a once in a lifetime event. But in all seriousness, these last two picks show why you need to listen to this show because we do a couple of things. We make money, we make sense, and we let our guests talk and express themselves, but it's all about number one, making money. And when you have a proprietary data set matched up with some really smart people, J-Bill is a non-obvious call, and it went up 8%. Now, you remember, these are short-term, one-day calls.
Explain, Bob, let's unpack the call because people might not remember last week. Exactly what did you say?
So here's what we said. The short interest can be used in a lot of different ways. Now, remember last week we were saying in GME's case, because it's singular to GME,
Right.
that the covering was actually negative because it would take buyers away from the stock. The stock fell out a bit, right? It's 25%. In this case, though, what we saw is that when you see the stock rising and you see some of the short interest also rising, sometimes that's very bullish. And we saw that JBL is an electronic components maker, makes JBL speakers amongst many other things. And we just said, this is coming up on our signaling model as having the potential for a very, very, very large one-day move. And that's exactly what happened. And the same thing with Oracle. We saw the same type of price action combined with what's going on in our database with the short interest move. And you look at the correlations between the price action and the move. It's a lot of the markets today are very technically, really technically oriented. And what that means is that the fundamentals of the stock, of course, are important. Of course, you want to invest in good companies. Of course, you want the ones that have good margins and growth and all that. But the way the move happens and the volatility that drives daily price action, very dependent upon short interest data. And we've seen a very high correlation between short interest data and price action. And that's what we're calling.
Right. And we should point out to the viewer here, not everybody does this stuff. I mean, Bob Sloan is, what is the word for sous generis? Did I say it right?
Right? Yeah, sui generis, maybe.
There's only a few, there's no place you can get this except for S3 Partners,
Right.
and the show and the J Bill call and the Oracle call. Unpack the Oracle call a little bit because when that was in real time, you and I were doing high fives, through the screen, obviously, but because we weren't in
Same,
the same
same,
office. But
same,
explain that.
same type of deal. You can see the winners and losers every day building momentum in the price action of the stock, and you look at how a move correlates with short interest. Then you can see pressure rising or falling. You can see buying pressure rising or falling based how does the stock do versus short interest. It's actually many factors involved, but the explanation is quite simple. Here's the difference. The database is not available to the world. It's only available here and to subscribers to our data through people like Bloomberg and Goldman Sachs. This is a very institutional product. And we have figured out how to actually take that institutional product and bring it to the everyday investor.
And unpack it for them as
And that's
we
right.
try to
And
do.
unpack it for them as to why these things happen. And it's not a surprise to us. We've seen this happen over many, many years. Our database goes back, almost 15 years now. So we have a very long history where we can test these things and see if they work. So one of the things for this week, for tomorrow, is CarMax. We are actually bearish on CarMax. And what's happening in CarMax is, you've seen recent sell-off signals. You've seen some continued weakness in the stock, and you've seen short interest, you know, rise quite a lot. So you're seeing just the opposite of what's happened with Oracle and J-Bill. You're seeing market weakness combined with increased short interest. You're seeing very weak trading action in the stock, and that's
So
what we.
this is a bearish call
It's a bearish
on
call.
S3's part. Okay,
That's right.
gotcha.
Now, we don't know what you hold. We're doing this in a vacuum. We don't know the rest of your portfolio. We're not an investment advisor. This is a data signal that we're bringing to you on this show because this is where data talks to the news. That's what makes this show unique. And we just want to emphasize that it's in a vacuum. We're not saying put all of your money in it or put all none of your money in it. We're just saying this is what this signal says. Tomorrow, bearish call on CarMax. Now remember, it reports before the opening, so if you do want to do something, you have to do it pretty early in the morning.
Right. And we should point also out that we're not investment advisors, but we're journalists essentially. We're information dispensers. And
That's right.
so we don't tell you what to do. We tell you what the data says. And if you want to take those actionable calls and work with it, I mean, it's a big market out there. There are literally, Bob, 500 stocks in the S&P. You get that, right? I'm like, I heard someone say that once and I couldn't believe, that's interesting. 500 stocks in the S&P 500. But just so you know, there's a lot of stuff out there you can invest in. But this is what we do. We unpack data and we will unpack news. Any actionable calls other than that for the week?
No, it's a holiday week. It's we it'd be very easy for us to make a lot of calls, but we only do it when we have a high degree of confidence that this is what we think is going to happen. So, we're not going to make hundreds and hundreds of calls a year. We'll probably make 60 to 80 calls a year. That's what the model does. And we might come on this show one week and have none. And if we have none, we'll say we have none.
Right, and we're never going to for the viewer out there. Just so you know, we're never going to force anything out there. We're just going to let the data and the news, as I reported myself, tell the story. And I try to be very fair. We're going to get to my headlines in a minute, and I'll tell you, it was one of the stories was a very interesting dance, and it'll give you a little insight into just how much reporting goes into like one small bit of story. And you need to do that. And the reason why you need to do that is because we actually care about the information we give you, making sure it's at least right and fair. And if it doesn't fit those two things, we don't go there. And so this
100%.
show strives to be both.
Well, yeah, 100%. And like we said last week, Charlie, a good day for S3 is half the world loves us and half the world wishes they'd actually paid attention to us. They don't like it. They have the other side of the bet, and our data actually says if you had the data, you would have made money and you took the other side anyway. We don't mind that because it's balls and strikes. If we're 51-49 every day, we've done our job. That's what we're supposed to do. It's the data has to have integrity and it has to have the accuracy because a lot of the world's largest investors can't say them on the air, but they do rely on this data. We're bringing it to the everyday investor in a different way than we bring it to the
No,
institutional.
and I've been seeing that. I'm just on our Twitter feed, just with the type of feedback we're getting from sophisticated investors. And I would just say this that we're trying to bring Wall Street to Main Street. I mean, I know that's cliche-ish. That was the old Merrill Lynch slogan back in the day. Charlie Merrill created that slogan, but it's kind of like what we're doing here. We're sort of trying to demystify some of the real sort of intense, data-driven information that hedge funds use. This is a market that, in many ways, is commoditized. Right? Information comes out there so fast. I mean, it's the
Well, you know what,
Bloomberg.
Charlie, though, I got to take exception with that.
Okay.
I'm gonna take the other side of that trade. We at S3, we have something in our culture. We ask really, really, really stupid questions. Like, what is that? How did this happen? Why does this happen? And we'll ask definitionally things like short interest and float and holdings, for example. Now, it turns out some really interesting happens when you ask really simple questions like, how did it start? Where did it come from? Why is it there? Why is it put together in such a way? Why is it available in one way here and another way?
Right. I think we're talking the same. We're talking the same book. What I was trying to say is that so much of the information that the average investor gets is literally commoditized. You get it anywhere else. On this show, that's not the case. I mean, this is done. This is
Right.
proprietary stuff that smart people rely on. The algorithm is not going to be trading this before you hear it. So just
Well, the difference is the information may be readily available, and people think because it's readily available, it's commoditized. If you bring a different lens to it, it's not
That's
commoditized,
true. That's true.
right?
Absolutely
And so
true.
that's what I think this show does is it brings a different lens to what is readily available data. Everybody has access to holdings data, and they don't ask certain questions. For example, is Bill Ackman a hedge fund? And I would tell you he is not.
Sometimes he is, and sometimes he's not.
Well, I would tell you he's not because he's not a daily market actor. He's not in the market every day. He's in the market sporadically, but he's labeled as a hedge fund. He's really not. Now,
Well, I mean, I think we don't know what he's doing on the side. We don't know how he trades around his book and everything.
yeah, you can look at his disclosures and you can look at the turnover and you can see how active he is. And it turns out, he has 10, 12, maybe 15 positions. I don't know. Not a lot more than that.
And he doesn't trade around those.
And he's not an active daily market. He's not in the market every day. I would say I would say that he is not a daily market active
Well,
participant.
one thing that we should point out to our viewers is that these terms that Wall Street throws around so much, hedge fund, private equity, I tried to teach my wife once the difference between the buy sides and the sell side, and then realizing there's not that much difference anymore because Goldman Sachs sell side actually has Goldman Sachs Asset Management. Buy side, Fidelity, buy side has a whole brokerage team. Sell side. All these terms have been mixed and thrown together, and they almost lose meaning. The old hedge funds were literally guys placing bets 24/7. That's the old Steve Cohen model, where
Well,
he
labels
traded
are the
small
same.
small amount, through teenies. He used to call them. He trades the teenies fast.
Sure.
And
Label
Michael Steinhardt back in the day on
every day.
commodities or whatever he did, currencies, you name it. George Soros on currencies, definitely. These were people that traded through market calls constantly. That seems to not be the case as much anymore.
Labels stay the same, but the definitions change,
Yeah,
right? And so, a hedge fund today, if you look at a lot of the multi-strats, they were doing what market makers were doing 20 years ago. So there's a lot of change in the way things are defined, even though the labels are the same. So that's what we do at S3. We really ask these very simple questions. And one of the things that we're going to come out, we're going to talk about it next week on the show. We had Ihor on. Unfortunately, we had some bad connectivity that day. But you know, battleground stocks where the float of the long is equal to the amount of short interest. That is where volatility is the greatest. That's where the bounces are highest and where the crashes are lowest. And we're going to start identifying those battleground stocks because any amount of money coming on either side of that can create tremendous opportunity if you really understand the market dynamics. And that goes back to what we're talking about labels and definitions. Big mutual funds are labeled as buy and hold, but they whip it around. So the classification of the information you get distilled properly and classified properly, combine that with short interest, you start to understand if money comes in on one side of the market, that side's going to win. If it comes down on the other side, that side's going to win. So
right.
being
I
aware
think what you're
is
saying
big.
is break it down to its basics to a certain extreme. This is not basic stuff. This is complicated stuff, and you can make some money from this. I
Yes,
mean,
you can.
yes.
But you have to be aware and you have to have the right distilled, clean, classified data. And it comes from asking simple questions, but executing on very, very, very complex things. Think about us as a data pipeline to the world's financial infrastructure. We are connected to 100 exchanges, 60 regulators,
Right.
60 banks, so many different things. We have a north of $60 trillion data lake.
And your source network, Bob, is second to none, except for me. But I mean, a
Well, we
lot of
have, we
people.
have a lot of people who lose our data. We see a lot
Yeah.
of information, but that's why we're also very careful. You never hear us say anything on this program about who's doing what. That's not what we do. You'll never hear.
And by the way, we cover this like baseball, and we it's like, and we don't call sides, and we've had guests on that have called sides where I've had to intervene and say.
Hey, why? We can't do that.
And by the way, you know what we need to have on, Bob?
Tell
Because
me.
since we had Jim Chanos on, I want to get Michael Saylor on.
I think we should.
I will reach out to him in the next day or so and try to get him on soon to let him give his side of the
Give
story.
him side of the story.
Because he
By the
does
way,
have he and Chanos are going at it on Twitter, as you know, and he has a compelling that's a story in of itself. I haven't dived into it, but we will for the next for next week's edition. I think it's
that
some of my
started
head.
right here. We
What
started that.
I know,
We
unfortunately,
started
we
that whole
started the whole
thing.
thing. Well, there are some battles that are worth having, you know?
Right.
And that's one of them. The long and short on MicroStrategies, the long and short on Bitcoin is clearly something that's captivating the market. We touched it off, and we're going to keep it going. In our next edition, we're going to try to. I'm going to ask. I'm going to reach out to Michael and try to get him on if he's willing. Obviously, I can't twist anybody's arm. I want to get to some of my headlines because I think they're actionable this week, and they're actionable in the sense that we're on the verge of war. It's a very upbeat intro for a very serious topic that, the U.S. can be dragged into a protracted, maybe war, on Israel's side in the Israeli-Iran conflict. As of now, President Trump is saying he's going to make his mind up in 2 weeks. We should point out that whether the U.S. will join the effort, essentially joining the effort means not boots on the ground, and I don't think that will ever happen. Hopefully. Hopefully, we're not going to be in nation building mode here, but the Iran nuclear facility in one specific spot needs a certain type of bunker buster bomb that only we have. We have the planes to deliver it. Only we have that. If we want to destroy that thing, the Israelis need us. And this is very controversial, both within the Republican Party, mainly in the MAGA movement. There's a big blow up between you name it, Tucker Carlson and Steve Bannon on one side, Trump. I mean, it's really caused a lot of heartburn inside the MAGA movement. We're not too concerned about that, Bob. We're more concerned about the market implications. I will say this: Trump has said in the past, he's thrown sort of head fakes out there. He says he's going to make up his mind in 2 weeks. I can tell you, everybody in Wall Street thinks it's coming sooner, maybe even this week. And most people on Wall Street think we're gonna aid Israel in this effort, and they think it's coming soon. And this is market moving. It's interesting that the price of oil hasn't moved much. I hinted at that in my Sunday column that it probably won't. I mean, world supply of oil is pretty good. There's a long on oil right now. I mean, that's the Exxon and the major oil producers have said that, so that's going to blunt some of this. The Israelis have not really taken out yet the Iraqi energy facilities, the oil facilities, the oil refineries. And there is this sort of thinking on Wall Street on the bright side. I mean, Wall Street's all on the bright side these days. Now, herds, as you know, change. George Soros and Scott Bessent, who's now the Treasury Secretary, and Stan Druckenmiller were experts at figuring out the herd in terms of how it impacted currency moves. Famously with the British pound sterling back in the day. The herd right now is very positive. Herd's looking at trade as positive, even though we see, because of the tariffs that are already in place, some indications of both an economic slowdown and inflation. I'm not saying it's showing up in the numbers in a big way, but the Fed clearly hinted at it. That's why they didn't move on cutting interest rates. The herd right now is looking at this conflict as a positive, that we're going to take out at least the nuclear facilities of Iran or degrade them so much that this country is not going to be a belligerent to the region. The Straits of Hormuz are going to be free. The Houthis won't be funded. Hezbollah is on its last legs. Hamas is basically destroyed, and this is the last, and this is at least short term positive. At least that's what it's saying now. I don't want to make a prediction. I can just tell you that, when you deal with global conflicts, lots can go wrong. Just be careful through this period. This is going to be an interesting period. Suppose Trump doesn't do anything. I wonder what the market would do then. Suppose he just says, hey, listen, we're going to negotiate with the Iranians and let them have some uranium to build, nuclear power plants, I wonder how the market deals with that. I mean, this is just really treacherous stuff. If you're trading, the trade is on the news. The news is obviously if and when the bombs start flying, the U.S. bombs, the bunker busters. So that will be the catalyst. Again, Wall Street is thinking this could come sooner. Trump is saying 2 weeks. We know in the past that he's thrown head fakes out there. Remember, he said like, "Oh, maybe they could be bombing tomorrow, and then they could be bombing soon. Then all of a sudden tomorrow they did it, right?" So remember, it's the art of the deal for Donald Trump. That's one headline. The other headline is this Paramount saga. Sherry Redstone wants to sell her one of the biggest studios in the world. I mean, it's a big company, Paramount. They do CBS. They have a studio. They got everything, right? We grew up watching 60 Minutes. It's being throttled, not just because of a regulatory review that involves news bias, which is for the first time, the FCC is actually looking at news bias. And here's the interesting thing that most people don't understand. I can go on cable, which I do, and I can express my opinion. I can actually do horrendous stuff with news and bastardize it. And I don't, it's totally protected because it's over cable. If you do that on the radio, if you do that on public airwaves like CBS local news, that is specifically against the law. There's FCC rules involving that. So 60 Minutes is being investigated over whether they are biased. That's CBS. That's a subsidiary of Paramount by the FCC. It's holding up this big Skydance deal that Sherry Redstone needs to have some semblance of wealth left to her. She blew, it wasn't her that blew it, but the market destroyed something like $50 billion of her wealth since 2018, since she took over what her father, Sumner Redstone, the media mogul, left her. This deal gets her two, and she can pay off some taxes and live as a billionaire still, I guess. We talk about we'd like to have a billion, but a billion to her, when you go from 50 to 1, it's not. I'm sure it's not great, right? But it's being throttled by the FCC because of this, and the Trump people deny this, but because Trump has a separate lawsuit against CBS for doctoring a Kamala Harris interview, which he says hurt him during the campaign that he won. It's a huge mess. They were trying to settle it recently for $35 million, not the 20 billion that Trump is asking for. The board of Paramount, again, is worried that if they settle this suit for anything more than 15 to 20, they're going to get hit with bribery charges, because the minute they settle, Sherry gets her money. And they're open to state AGs, Democrats, if they ever take control of Congress. So it's a real mess. But it could happen soon. So just keep an eye on that. And that would have an impact on the stock. Obviously, the stock's trading off a little bit because this deal's never getting done. It has to get done somewhat soon, by the way. October is the drop dead date for the deal.
Have you ever seen you are the quintessential journalist.
Well, thank you.
You know what you are. And you're a very fair guy.
I try to get both sides, and getting both sides of this story.
Have you ever seen something like this where
no,
you have strategy and ethics kind of bang?
I've never
the
seen
president.
I've just never seen it. No, I never did. I mean, usually the FCC review is the FCC review. For better or worse, people are criticized Brendan Carr. I think 60 Minutes should clean up its act, to be honest with you. I think there is a bias there. And if you want to be biased on public airwaves, I mean, there's a new sheriff in town. I'm sorry, do cable, okay? You should not be doing it over public airways. And finally, someone's saying enough. And I don't know, I still don't think that 60 Minutes did anything materially wrong with that Kamala Harris interview. Yeah, they cleaned it up a little bit.
Viewer, when they hear, we had Bill Cohan on last week, who was great. And it was great to watch the two of you interplay, because you're such experienced journalists and so well respected. You both are.
And we both dance with the same players in our way of journalists. See, I can't do a story like that unless I talk to the Trump people I talked to the Paramount people. I talked to this guy. That I mean, you do not do. This is not. These are not one source stories. They're
Right.
layered stories. And this is what I'm telling you is the best I know. This thing is still in limbo. I still think there's a chance it could settle. That's probably positive for the stock. I'm not telling you to buy it. I'm just telling you what I think would happen if this goes down. The other story is a fascinating. It's insider baseball, but it says so much about the way business is done in Washington these days. So Charlie Ergen, you know who he is? He's a telecom titan. He's sitting on tons of spectrum right now. Very controversial guy. Gives to a lot of Democrats. He's always people have always accused him of not using the spectrum. He denies that to build out this fourth wireless carrier to
Right.
compete with AT&T and Verizon. He has the licenses from the government. Remember, this is government gives you buy the license of government. It's almost like it's almost a benefit. It's the government is bestowing a responsibility on you to get these licenses. They could be worth a lot of money. They are worth a lot of money. The government was involved in an investigation whether he's building out his spectrum fast enough. Brendan Carr, again, the same head of the FCC, was launched the investigation. It was tanking the stock of EchoStar, his company that owns his spectrum and also his satellite provider Dish. He tried to get a couple of meetings with Brendan Carr, really couldn't get in there, and then he got a meeting with Trump. And Bloomberg did a good job reporting the meeting with Trump. But when I'm reading this story, I'm like, how the hell did he get a meeting with Trump? Like he gives the
Probably
Democrat.
just called them.
No, he called Chris Ruddy. Now, full disclosure, Chris Ruddy is a friend of mine. Okay, I'm just telling you. I've known Chris forever. I like Chris. Good guy. I mean, listen, I'm friends with plenty of people I cover. Right? I like Dan Loeb, but I still have to cover him, right?
Right.
I like you. Hopefully, we never. Well, I don't want to go there. But in any event, Chris called up, set the meeting up with Trump. And now Chris runs Newsmax. He's a newspaper. By the way, former New York Post reporter. And now he's really rich, which shows there's still hope for me. He owns Newsmax. Newsmax is a huge operation now. Now it's in TV. He's an influencer. He holds court at Mar-a-Lago. He's friends with Trump. And he got the interview with he brought Ergen to Trump. Trump intervened and the pressure's off EchoStar. The stock is up 50% since this, but it was Chris Ruddy that did this. Now, why would Chris do this? Well, Chris and Charlie Ergen go way back. Ergen has carried Newsmax on the satellite on Dish, right? Dish is part of the whole EchoStar ecosystem for a long time.
Yeah.
And Trump asked Chris, he goes, "Is he biased against conservatives?" He goes, "No." He goes, we've had a good relationship. He could be tough. Charlie Ergen's known as a tough. He's a poker player, apparently a professional poker player as well. And and so Chris got him the meeting, and the rest is history. But I just so you know, I've never seen a story like that. The Bloomberg story was fascinating because I'm reading a Trump and this thing happened, and Brendan, backed off his investigation allegedly. I'm sure Brendan is still watching to see if Charlie Ergen does build out the spectrum. But it left out that key element, like who set up this meeting?
Amazing.
That's where I came in. So the
Yeah.
Post ran the story today, and it's getting it's getting pickup, and people are talking about it. Journalists generally don't try to stay out of the news, not be in the news, but right, report the news. Although Chris is a different animal right now. Chris is legitimately a power player within the conservative movement. He
No doubt about it.
legitimately is. I mean, he built an empire, He's building an empire, I should say, and he has a lot of stroke with Trump and with the Republican Party in particular, and he was able to make this happen.
Amazing. So I want to go back to the first part of the of Gaspo's headlines. The war in Iran right now between Israel and Iran, we're watching a couple different things on our end, a little off the radar screen. One is a Hong Kong stock, a insurance conglomerate called Ping An. And
Say what's the symbol?
Ping An is, well, it's the number is 2318 as
Okay.
the code in Hong Kong. It's a $127 billion market cap company. This is not a small company. And it covers a lot of different things. It covers shipping, number one, healthcare, number two, real estate, number three. So it's an interesting proxy that the debt to equity ratio has been high, profit margins have not been great, and the short interest has gone through the roof. So one of the things that caught our attention was the fact that it does a lot of shipping insurance. Now, if you're China, and it probably does a lot of business with Chinese cargo all over the world, um, people are saying there's going to be some kind of supply chain disruption because of what's
Still,
going on. Yeah, sure, because of what's going on in the Middle East. There's
that's
oil
interesting.
tankers and everything else. The second thing is a company called Apache Energy, and that's a gas and oil exploration company. Now, this is a very interesting thing because the oil had been dropping. Short interest was going up a lot. But if this thing turns out to be very messy, you could see a massive short squeeze in Apache Energy. So a lot of these macro themes that are happening in Iran, because Iran is just such a supplemental player, it supplies so much to China and Russia and all sorts of, I would say, um, non-traditional players, let's put it that way.
What is your data signaling on both of those?
Well, one, you're seeing the short interest rise like crazy in on Ping An. That's number one. So, very, very, very bearish on cargo insurance. They think there could be an accident. Something happens in the Strait of Hormuz, et cetera. And then, secondly, Apache has been very heavily shorted because people thought that oil would be falling. It fell. And then short interest rose because obviously that's not good for oil exploration companies. But as this plays out in Iran, and if in fact the Israelis do attack the oil infrastructure, um, the shorts get squeezed to the moon in that stock. So that's
Yeah,
something to keep
that's
an
going to
eye
be
on and play
interesting.
that. Yep, keep an eye on that.
There's a short squeeze play right there.
There is, based on macroeconomic events and what happens over the next couple of weeks or a couple of days, as you mentioned at the top of the show.
Yeah, I mean, I'm telling you, Trump keeps talking is again latest 2 weeks. Just I think this is day to day. That's I could be wrong, but I'm just telling you, he's thrown head fakes before on this.
Yeah, I mean, we look at the data. You are talking to the people in the administration. You hear all the chatter. That's what makes this show, I think, so fascinating because it's that conversation expressed in Hong Kong and an oil exploration company, and we tie it all together and say, watch this space.
Oh, and we should take one more victory lap. TikTok has just been given an extension, and another 90-day extension. As we first reported, we brought it to I reported in the post. I brought it as I reported in the post. I brought it to here real time to risk and return that Donald Trump was gonna that this thing is involved. I mean, it's a piece of the of the trade talks with China. Chinese are never gonna agree. Remember, TikTok's a Chinese company. US lawmakers have said it's an espionage tool to Chinese. Trump thinks it helped get him elected. So he's given it a lifeline and he's trying to craft together a deal to put it in US hands. The What's going on now is that the deal is not coming together because it's wrapped up in these prolonged trade talks. And as I reported and broke on risk and return, the Trump was going to give it a 90-day repeat. This is the third extension, so it doesn't get banned according to law, and that just happened. So I just want to keep people abreast of some breaking news and pat myself on the back. I'm sorry.
I have one that I have one request.
Yeah.
So we have a very interesting mayoral candidate runoff
Oh God.
coming up. Has anybody asked Mamdani whether he supports Iran?
They've asked the other question. Does he believe in I believe they've asked him, do you believe in a Jewish state? And he's demurred on that. Now he couches it as I don't believe states should be religious based. I mean, he doesn't couch it as he's an anti-Semite. Assume what you want. You can take him for his word or not. But He's obviously very progressive. The progressive wing of the Democratic Party is pretty anti-Israel, clearly anti-Netanyahu. Um,
You're anti-everything. I mean,
it just,
you're
the real
anti-money,
problem with
anti-Israel, anti-everything.
listen, the other part, the problem with him, the real problem is he's a like a far left wing. Almost communism is not too harsh of a word with him because he does believe in collectivism in a sort of in sort of ways that liberals don't. I mean, he believes in sort of I mean, you can just go down. I mean, besides tripling the minimum wage. He's thinking about, making free bus service. I mean, this is another level, to prevent price gouging on foods. I think he wants the government to take over you have to check me on this, but he's had some very radical ideas on to bring down food prices that are clearly not, anything that Adam Smith has ever thought of.
Well, your friend, right? Casmatidis, the owner of Gristides. It is amazing to me the cause and effect doesn't really seem to phase anyone. In
I saw a headline that John,
Not close my business down.
yeah,
Okay.
John has always toyed about running for mayor, and he'd be a great mayor. He's a brilliant guy. He's a good guy. And he's a guy that started from zero and built like a lot of money and through hiring people not because he was a speculator or anything. He was a businessman. He was an entrepreneur. John said he'd move out of the city. I can't tell you that real estate interests are freaked by this. One of the things that really freaks them, and they should be freaked by this, is that this guy is actually close to Andrew Cuomo in the sense that he's not getting trounced like someone this out there. And by the way, a guy with no experience, a guy that's been he lives in subsidized housing. He's a lucky sperm kid, I guess is the best way to put it. He's never really held the job, and he's got these bizarre ideas about global politics and running the city. That this guy could come that close. And I will say this about people that own businesses in the city: he is the canary in the coal. Oh, that's you, okay? But just I will say this to you, Bob: he is the canary in the coal mine. This state, New York State, is run by some wacky people. In many ways, the mayor isn't as powerful as what goes on in Albany because they set the agenda. I mean, like Andrew Cuomo couldn't cut taxes or raise taxes unless he had Albany buy-in. And the people who run the Democratic Party, which controls the state, are very far left. They're like him, or maybe a little less left than him, but not much. And Kathy Hochul, who's the governor and a disaster as governor, I would say is I don't think I'm being too harsh when I say this. Just she hasn't been a very strong leader. She's moderate and she's far and she's pretty and she gives in to them all the time. And it does point to a sort of broad existential sort of conundrum for people like Bob Sloan and others and all our friends
This
that
is why I mentioned it because, hey, we employ a lot of folks, and we pay our taxes, we do our things. Um, it's just got to the point where someone has to ask him that question
well, let me
because
ask you this, Bob. Could you pay your folks from Connecticut or Florida?
sure, you could go anywhere, but
I'm just
I'm
telling
a
you,
New Yorker,
that's what makes these people
go
so
anywhere.
that's what gets you so enraged by them. They don't understand that if you're in the information economy, which we are, I can do this from South Carolina.
By the way,
My phone,
our head of research is
yeah,
in Tennessee. We have people in Boston. We have people in
yeah,
Seattle. We have people in Florida. We could move this company to Florida. No problem.
yeah.
No problem.
Why can't Jamie Dimon move half his people to Texas and Florida?
He could.
He could. I mean, he doesn't want to. It would take some. It would take something. Wouldn't be a
Now,
gazillion
look, I mean, they
state.
have an amazing real estate presence here in New York
Yeah,
City. They just built this magnificent building on Park Avenue. I mean, there's a lot of things keeping him here amongst just the physical assets.
yeah.
Forget
But you don't need
the
you don't.
homes and schooling and everything else. So,
But listen, you don't. The schools are not as good anymore. I mean, we saw what happened with Columbia. By the way, all the Ivy League schools and all the elite colleges, all, I can just tell you, I talk to employers, and you're an employer. All their reps have gone down. People are saying, if I get a really smart kid who works hard, working class kid out of Rutgers. I think I like that guy. I bet you that guy would be a good worker. And that's what's going on right now. So or University of Florida, which is actually a good school, by the way.
A great school.
Or University of Alabama or University of Georgia. You could go down the
Well, I can
line.
tell you one thing that's very interesting, right? GPAs from certain, let's call them blue-blooded, gold-plated schools are inflated. And
Yeah,
but
that's
state,
true.
but state school grading curve is not.
Hey, University of Missouri.
And they're not. And people pick up on that. That, a high GPA from a state school, they're not giving it away. Whereas, a lot of
particularly a
the
good
higher end, better, I would say,
right.
the Ivy League colleges, yeah, are
Particularly a
totally
good state
inflated.
school that does, we're talking about good, the sort of some of the flagship state schools are just as good right now. And I think and so but my bigger point is, so you don't need to be in New York. You don't need to be in Boston. You don't need to be in Silicon Valley. You don't need to be in LA.
Nope.
You can be in Texas. You can be in Florida. Ken Griffin is down in Florida with Citadel. And by the way, I ran into him briefly. We were both at the same conference. He said, "Come on down. Let's talk. Let's meet. And let's have a margarita." I swear to God, he told me that, and I'm going to take him up on it.
You should.
I will. Well, I think that's it for this week's riveting edition of Risk and Return. It's a shortened edition. We're going to be back next week. We'll probably have a guest. We have a bunch of them lined up. We're just waiting for them to say yay or nay. I try to say that, don't be scared of me, just be scared of Bob. And he's the hammer here. And so, anyway, until we meet again, this is Charlie Gasparino with Bob Sloan for Risk and Return. See you next week.
See you next week.